The JSE All Share Index is hovering around the flat line at 63,680 points, with investors weighing a deteriorating global economic outlook amid high inflation, rising interest rates and the ongoing war in Ukraine. We speak now to Thabiso, Mamathuba, investment analyst at FNB, for a roundup of the latest market developments at midday. Thank you very much for availing yourself. So it would seem the rand is trading slightly better today, but still hovering close to the 18 rand against the dollar mark. Give us a sense of what's driving factors there.
Sure. So yeah, we're seeing this, the rand continuing to just trade around that $18 threshold. Obviously, as the greenback remains quite strong, we're seeing also rolling power cuts locally, also just continuing to add a bit of pressure there as well. But so far, currency markets are a lot calmer. This morning with commodities also firmer. Obviously, this is despite the US dollar remaining stronger. But then so far in the afternoon, we're seeing the top 40 is lagging its peers in our time zone, with the index down just 15 points as Naspers and Prosus contributed to the declines in healthcare. While healthcare and property are also down, while telcos and food retailers are sort of outperforming so far. So shares in Remgro are trading quite higher this afternoon after the company posted rather positive sets of results. But then just lastly, looking at global markets, we're seeing US futures just sort of pointing to a positive start later this afternoon following a very late rally in Asian Pacific markets.
So according to Statistics South Africa here at home, total employment decrease in the second quarter of this year, a 1.2% decrease, which translated to 119,000 loss in jobs. According to your understanding, what drove this?
Yeah, so this was largely due to the decrease in community services as well as business services. There was quite a substantial reduction in employment in those sectors. Construction, manufacturing, as well as electricity also recorded declines there. However, there were increases in trade industry, mining, manufacturing, as well as transport, which was quite positive. And if you look at a quarter-on-quarter increase in the average monthly earnings, this was up 1.2%. So basically, this occurred in the formal non-agricultural sector from an average of about 23,600 in February to about 24,500 in May 2022. So this average monthly earnings increases were reported in construction, community services, transport, business services, as well as manufacturing, mining, and electricity. So far, a bit of a mixed bag in this print, with a decline on a quarter-on-quarter basis in the total employment numbers, which was obviously offset by the marginal increase in average monthly earnings.
Let's take a look at news coming from Standard Bank. I mean, they've enjoyed some relative success in West Africa, and now they're looking to expand beyond that and head on over to Morocco and Egypt. What do we need to understand about those markets, and if this is a move that will bear some fruit?
Yeah, sure. So Standard Bank Group has quite a strong global presence with a very strong focus on, emerging markets. So the group operates in about 17 countries in Africa and, selected countries in other continents. So they have been quite successful in establishing a rather meaningful footprint in Africa, obviously excluding South Africa. So many markets in the rest of Africa are still underserviced and banking penetration remains quite low. So the move to North African nations of Morocco and Egypt will be seen as the group's effort to sort of expand on its global footprint and other services to clients with operations in the largely Arabic-speaking region. So its presence in African markets, which contributes around 35% of revenue, I think this will definitely further provide further diversification benefit as well as exposure to other faster growing regions. So I think quite a positive move by the company.
Junior coal miner MC Mining wants to raise some 472 million rand for its Makado project in Limpopo. What do we need to know about that development?
Yeah, so the company is hoping to raise about 40 million Australian dollars after, under the rights issue, which will be priced at around 20 cents a share for shareholders that are based in Australia and New Zealand, and at about R2.36 per share for those shareholders that are based in South Africa. So the proceeds will satisfy a requirement for debt funders who are expected to contribute to the development of the Mercado project. So according to the company, this project has a very attractive project economics and is quite well positioned given the favorable coal price environment globally. So the development of the Mercado project will be funded by a mix of debt and equity. And so far, MC Mining has received indicative commitments of debt funding of about 305 million, which represents approximately 26 million Australian dollars towards the development of this project. However, I mean, we do expect this rights issue to be quite dilutive for current shareholders, which is why the share price of the company is down 7% so far today.
Thabiso Mamathuba is an investment analyst with First National Bank. Thank you, ma'am.